It's time now for charting futures. Here's Abigail Doolittle. And Abigail, we have out first up day of the month of December. Are the stock futures suggesting it's going to last?
Well, let's take a look at that indeed, Romaine. First, let's take a look at what we do have today, because coming out of 3 down days, we have a solid rally here for the S&P 500 futures, up 0.9%. The NASDAQ futures, interestingly, lagging a little bit, and the Russell 2000 right in between the two, up about 0.8%, confirming the risk on day. Bond futures, U.S. 10-year Treasury futures, down about 0.4%. And this is a dynamic that we've had more recently that suggests that, yes, maybe the futures are pointing to more gains ahead. When we take a look at this chart in the Bloomberg, what we're looking at here, in blue, the S&P 500 E-mini futures. In white, we're looking at the 10-year Treasury note futures, so it's actually bond price. And we see coming out of June, we had that interesting dynamic where both were trading higher together, a little bit sideways. But the point I'd like to make, more recently, since September, we have a pretty solid downtrend for these Treasury futures. If that's maintained, it suggests, if the old relationship, when stocks go higher, bonds go down, it suggests that maybe we will see stocks go higher, even if it's a little bit of a choppy ride. To talk more about this, I'd like to bring in Steve Suttmeier of Bank of America Merrill Lynch. Thank you for joining us, Steve. And
thanks, Abigail.
That's an interesting chart. It really does suggest that the recent pullback, if you could call it that, might just really be brief if it lasts at all.
Yeah, I think so. I mean, it also suggests that some of the rotation that we've seen, more towards value, more towards industrials and financials, and somewhat away from growth might continue if that trend persists.
So let's put it into the context of your daily E-mini futures chart, because you do think that it could stay just a little bit bumpy here.
Yeah, a little bit. I mean, normally December is a very bullish month, but the first couple weeks can be volatile. So I think that's what's going on here. So you're getting mixed signals from headlines and macro. So it triggered a little bit of a dip on the S&P, but we think we can hold somewhere around 3,000. And, and I think we can bounce off that level and rally towards what that triangle projects. On the cash market, it's about 32.20. On the futures, it's about 32.75. One thing we're showing here is a Williams %R indicator. And what I like about it is it keeps you in markets. It gets overbought quickly, and it keeps you in uptrends. And when it gets out of that overbought level, it suggests a little bit of volatility. So I would look to buy downward volatility, so call it the Grinch dip ahead of the Santa rip. That's what I'm looking to do here in December.
A little poem from Steve Suttmeier here on Charting Futures. I like it. So let's put this into the context of a longer-term weekly chart that we have here. And I'm trying to pull it up, and you know what? It may not be working. So why don't we just talk about this chart here?
Sure.
If you were to have a stop here, so you're looking at all-time highs as a possible target if we do see that Santa rally, what kind of a stop would you use?
Well, for me, when I'm looking at the S&P, and I'm going to focus a little bit more on the weekly, even though it's not here, just talking about our views for 2020.
Okay.
We think that 2020 could look a lot like 2017 or 2013, both bullish years for the market. The reason why is it's deja vu all over again. We had a similar it's gone. We had a similar pattern in 2015 and 16 to 2018, 2019. Similar pattern in, there we are.
Here we are.
That's beautiful. Thank you very much. I appreciate that. So you can see here, history is rhyming. It's deja vu all over again. You had a breakout in early 2013. After a consolidation for 2 years, another breakout in late 2016. And here we go, another one right here. So in my humble opinion, deja vu all over again. 3,000 is very important in the S&P. If that holds, I think we rhyme and we continue to have a good year in 2020, similar to what happened in 2017.
So you are buying dips for new record highs using 3,000 as a possible stop.